What's going on, everyone? I hope you guys are ready for the market tomorrow because we are set for some perfect moves. We have seen something in the market today that we have not seen in a long time, and every single time this happens, there are amazing opportunities in the market. So make sure to stick with us all the way to the end. We also have some great important news to cover, some of which are some things that haven't happened in 16 years. So with that being said, Tom, let's get right into today's episode.
Yeah, the overall market really tanked down this morning. There were some pretty bad jobs numbers that came out, and we're going to actually get into that later in the video. So make sure you guys stick around to see exactly what caused that big drop. And I actually think that these job numbers were so important that it's actually going to, maybe actually affect what the Feds do here over the next couple months with some of their decisions. So it's going to be big, Mike. We have a lot of stuff to talk about. The first thing, obviously, though, is the overall market took a big dip today, fell down to around a pretty big support, 437, 438, came right back up and tested 440 end of day. So a very up and down day, especially once you count market opening. But the big drop was this morning with those jobs numbers, Mike. It was definitely a volatile day overall. And man, it just, that market has been so hot lately, but, the SPY's starting to kind of double top here on that daily.
Exactly. And everyone's looking at the market right now saying, you know what? It's had a great year so far, but what is next? And we have an awesome treat for the audience today, Tom. We're going back for 72 years worth of data, and we could see that the first half of July is actually really strong for the stock market. So we could see basically from the beginning of July until like the 16th day of July, the market does really, really good. And like I said, this is 72 years worth of data. It's not like we're handpicking like 10 years worth of data or something crazy like that. So that is definitely good to see. And, we could see from like that day 16 mark to the rest of July, it tends to be somewhat flat to down a little bit. But hey, this is definitely a good sign.
Yeah, it is. I mean, that's exactly what you want to see. Now, I know that the overall market has actually been a little bit shaky, Mike. Like, if we go back to the chart here of SPY, let's go to July 1st. I mean, honestly, since July 3rd is where we had it first open there on Monday, it's just been straight down so far. So far, it's been going against the trend. I wonder, though, if we'll start to bounce back up. There is actually a little trend line here that we're bouncing off of. If you look at it kind of on the hourly, I think it shows up a little bit better. You can see it's kind of lined up there from that low a couple months ago down in June. So I do like this, Mike. I think that that's a good sign, though. But so far, we've been honestly going against that pretty hard.
Exactly. And retail traders are partially leading the way here in this rally up. So we have some more data on the chart right here that basically shows flows from, retail traders. And if we look specifically on the right-hand side of the screen at the blue, like up and down bars, we could see we are seeing some of the biggest single stock U.S. retail flows in over 15 months, which is awesome to see. So we could just see that recent flip in a positive way. And, we really haven't seen this type of what I guess I'll call euphoria in a little bit. We have a lot of stocks still very close to their highs. But, then again, like you said, Tom, July hasn't been the best so far, but it hasn't been horrible either.
Yeah, it hasn't. And, there was some news today that I think was pretty bad with the jobs numbers and stuff. Like I said, we're going to get into that. I think that could actually make for a pretty bad end of the month here with the Fed decision. But, the overall market, it had that bad drop today back down here. But I know a lot of retail traders have been really optimistic lately, even with like Nvidia, AMD, Tesla, stocks like that. I know a lot of people have been watching them to the upside still, and they're still rooting for them. I know that they had some pretty bad moves today in the past couple days, but that doesn't necessarily mean that they're just going to fall down right now. They're still really close to their highs in a lot of cases. Like if we go to Apple, man, with their recovery today, they almost got back up to that all-time high again. I mean, they're almost back up there. Like if we have one more good day like this again tomorrow, they'll be right back there.
Yeah, I think the key going forward will be selectively playing the industries where the money's flowing. Like just because, let's say, stocks like Nvidia or Apple have had amazing runs this year, that doesn't mean they're just going to keep skyrocketing for the rest of the year. Maybe they calm down a little bit for a couple weeks or a couple months, and maybe some other stocks start to take the lead. I think a big thing going forward is finding where the money's flowing and then following that wave of momentum. And Tom, I know you actually saw some interesting, I guess you could say an interesting article today pointing out how there are some signs of, like, you know, let's say some of these semiconductor stocks slowing down and some of these EV stocks taking the lead.
Yeah, I really did. You know, it was very interesting. And we're seeing, like we were talking about, a lot of retail traders, a lot of inflows into U.S. equities right now. And that's been really pushing a lot of stocks to the upside. And I feel like that as these stocks rise, we're going to see a lot of people starting to take profits on some of these bigger AI stocks, you know, like NVIDIA, AMD, even other stocks like Apple, Microsoft, Amazon, stocks like that. They are very into AI, cloud-based things. You know, they're using stuff with semiconductors all the time. Those are very sophisticated tech companies. For anybody who doesn't know, you know, NVIDIA, for example, makes like graphics cards, which are really powerful, and they run a lot of these AI applications, and especially the very expensive ones. I mean, some of them are like 10 grand plus. It's some are really crazy in price, but yeah, at the end of the day, I think that we're going to start to really see this rotation, you know, because we're seeing a lot of money flowing into some of these EV stocks, kind of like Lucid. You know, we're seeing the Saudi PIF fund getting in more there, and I'm so glad to see that. You know, a lot of big money starting to pop in to a lot of these lower price stocks, and as that rotation starts to happen, Mike, you know, we'll start to see some of these, in my opinion, some of these lower price stocks start to really pop off. And I know that we're talking EVs here on that article, but I even think that stocks like Zoom, for example, could start to really recover back too.
Some of the growth stocks that didn't quite get enough love over the past couple months. Yeah, definitely have potential, no doubt. But back to like the EV side of things, I'm also a pretty big fan to see like rotations, whether it be to EVs or to value stocks or to growth stocks or whatever. I really love the quote-unquote rotation trade. And the reason for that is because there's so much opportunity associated with it. Like, let's say you look at some of these stocks right now, like Rivian or Lucid, or, you know, Tesla had like a decent recovery already, but, you know, let's say you look at Rivian, like, the thing is still booming right now. Like, today, it closed up by like 6%, and, you know, over like the past couple months, this thing went from like $12 all the way up to like almost $22 a share. So it's like, it's running with some power, and, you know, a lot of times rotations happen for weeks or months at a time. I just think the biggest thing is like how you play it. So like, for example, like, you know, you can make a lot of money trading rotations, but it's like, if you're just going long super far out of the money weekly calls, you know, you can lose where like you really shouldn't be losing. You know what I mean? So play it strategically, of course, but definitely don't ignore this power that we're seeing with these EV companies.
Yeah, don't, because there's a lot of momentum right now. Like you mentioned, the short term, like that uptrend has been insane. And today we had another huge move, 5.82%. And look at that correlation to the SPY, negative 0.4. This stock was up 5.8%. Now, I know that the SPY recovered up end of day, but the SPY was down 0.78%. Just look at the heat map here today. This was awful, Mike. It was one of the worst heat maps that we've seen in a long time, especially considering how this uptrend has been so explosive. And, you know, there's a lot of jobs numbers and stuff like that associated with a lot of these bad moves today. But even like the financial industry, like look at that. Citigroup down 3%, Bank of America. I mean, this was just a bloody day here today.
I'll tell you, today, especially close to open, was one of the bloodiest days I've seen in a long time. And the main reason for that is just to the sheer amount of stocks that were in the red today. Like, I'm not even kidding, Tom. Out of like the 500 stocks in the S&P 500, at one point, like 492 of them were red or something like that. Like, it was like literally almost every stock was red. And you don't see that too often, right? And a lot of people are like, all right, like, why did we see so much selling pressure this morning? And Tom, you keep hinting at this jobs report, but like, you know, tell us, why was the market so red this morning?
Yeah, it was actually terrible. So, you know, the jobs report came out today, and man, it was awful. So the ADP jobs data came out. Now, I know we didn't really talk about this. I actually didn't expect this to move the market as much as it did. I was actually really watching more for the non-farm payrolls and the unemployment rate coming out tomorrow. But this kind of surprised me today whenever I woke up and saw this. So the ADP jobs report showed that private sector jobs, get this, jumped by 497,000 in June. The Dow Jones estimate was only 220,000. It beat it by over 100%, Mike. I mean, that is just amazing right there. Obviously, way more than the gain in May as well at 267,000. So that was great news, right? A lot of people say, "Oh, good. You know, there's jobs all over the place. That's fantastic." That is not good though for inflation. And honestly, when you go to look at the FedWatch chart, it made their probability for a rate hike in July explode to 92.4%. And if we go to the probabilities chart here, man, these percentages went up a lot. So like in the one coming up for September, it went up to 25.9% for a possible another hike. And look at this, 36.6% in November, 34% in December. So man, it's like the feds are trying to make jobs go down and they just keep going up, Mike. It's honestly kind of weird here to see this happening.
Exactly. So it's very interesting. It's like we're seeing some decent economic data, but then again, it's like sometimes like good news is bad news for the stock market. And like we saw today, the stock market tanked for, a good amount at open, and the 2-year treasury yield actually hit a 16-year high today, which is not a good thing. So that was definitely interesting. But Tom, while we have some decent economic data on that side of things, we also have some scary economic data that we cannot ignore. Right now, we are seeing credit card delinquency rates at the same levels that we saw in 2008. So that is not good. We are seeing credit card delinquencies rise to the same levels as 2008 is not something you should celebrate. We could see like it broken down by age group, and it's not good. For the most part, over the past couple years, credit card delinquencies have been really small and low because of all the stimulus and boost from COVID. But it looks like things are starting to change in a bad way.
Yeah, I'll tell you, those stimuluses and stuff must have really been helping young people. To see that come down and be that tight right there was really surprising to me. And yeah, I couldn't believe that. Now it's flying right back up to, more normal levels. If it would be more around like 2.5%. But now they're getting up to 3.5% on those delinquency rates for like people in their 20s and 30s. Man, that's pretty rough. And you know what I did find kind of weird here, Mike, is look at this. The people in their 30s, their delinquency rate is actually over people in the 20s. Now, I know that this sometimes goes back and forth, but I do find that kind of funny. I don't know how that happens even. I don't know. Are the 20-year-olds getting smarter or something? Like, I guess that COVID boom must have really helped people. There was a lot of TikTok and stuff like that going on, so I know that type of thing was really explosive then.
Also, lots of sketchy crypto stuff too. So I don't know what's going on. So NFTs, like
buy my 8 picture for $500, Mike. I swear it'll go up.
Oh my God! The 70-year-olds are not buying any of that bull crap, but the 20-year-old, 30-year-olds, and maybe even some 40-year-olds were definitely caught in that craze. But yeah, either way, it's not good to see these rates rising the way that they are right now. Well, one thing that is booming right now is Meta's brand new Threads app, which is basically the copy and paste version of Twitter. So essentially what we had is yesterday, Meta and Mark Zuckerberg released a brand new social media app called Threads, and they have 30 million users in less than 24 hours after launch. I'm sure Elon's not too happy right now, but hey, it's definitely a good sign for Meta, and I'm sure Zuckerberg's really happy. I know he was I wouldn't say tweeting, but I guess threading a lot yesterday.
Yeah, it seems like he has. That's going to be funny if this ends up sticking around. People are going to say, "Oh, I made a thread or something." It honestly sounds kind of good though, I kind of like it. Thread, it kind of goes well with what it is, cuz how people always say there's threads and then you keep like talking, going back and forth and stuff like that in the thread. So it makes sense to me, but I will say 30 million signups with how many people are on Facebook and Instagram and stuff. I kind of thought there'd be more, but I don't think it's even as important as there was 30 million signups today, or even how many signups even happen over the next month or two. To me, is this going to be sustainable? Is there going to be a good monthly active user base on this, or daily active user base? I think that there will be. I like it. I've made a couple threads myself. I saw Mike. I saw you did some as well. We'll put our links down below if you guys want to check those out. But man, it's going to be fun with threads, Mike. But like I said, it has to be sustainable. And we actually saw some pretty big stuff coming from Elon today with like a lawsuit possibly. And it wasn't necessarily a lawsuit, but the letter definitely is kind of hinting at that. I would say at least the beginning stages of something in that sense.
Exactly. So while Zuckerberg's celebrating with this new app launch, Elon Musk is not too happy, and this is just giving him some more motivation for their cage fight soon. But basically what we have is a warning sign from Elon Musk and his lawyer to Mark Zuckerberg saying, yo, like, what's going on here? Like, basically what happened is Mark Zuckerberg hired a bunch of former Twitter employees, and surprise, surprise, those Twitter employees know a lot about how the Twitter slash, I guess you could say, kind of Threads whole ecosystem works, and obviously that'd be a great benefit. But the problem is that a lot of these employees should have been on non-disclosure agreements. So long story short, Elon Musk is not too happy with this Thread situation, and Mark Zuckerberg might have a lawsuit coming pretty soon. So definitely keep that in mind going forward. But Tom, maybe they can just settle this in the octagon in that cage match.
Oh, wouldn't that actually be hilarious? What if that was a bet on the fight, Mike? What if Elon wins, Zuckerberg has to get rid of Threads, and if Zuckerberg wins, or what if they have to sell their companies to each other or something like that, or merge them or something? Man, that could be really weird, but that would be awesome. I hope it is the case, but it sounds terrible, that they would literally take the exact employees, have them make a copycat Threads app. I don't know. I think that 100% has basis for a lawsuit. And I think that if there isn't the Octagon match, there will be a lawsuit for this one. And I don't know, Elon's smart with his money, and he's going to have a hell of a lawyer team, exactly like Facebook has. So that's going to be a good fight there.
I think there's about like a 0% chance of Elon coughing up Twitter, but I would like to see some extra stakes added to this cage match if it even happens, Like, I know it looks like it might happen right now, but honestly, I'm a little bit suspicious that one of them might back out.
Yeah, I think that one of them might, and I think it would be Elon, obviously, the one who's going to back out. I mean, I don't know, Mike, his build just does not seem anything like I would think he could take on Zuckerberg, but you never know, he has that weight behind him, so maybe that's his, like he said, he might just lay down on him. That's his main move.
My gosh. Funny stuff. Well, Tom, it's now time to get into what everyone has been waiting for, and that is some setups for tomorrow. One stock I'm watching very closely is Netflix. This thing has approached the brick wall $450 resistance level. It's back below it. It's pretty overbought from the past couple months, and I can see this one pulling back. I have two targets for this one. I would like to see it retest 420 and then 415, but I'm definitely looking at this one in a relatively bearish way in the short term.
Yeah, I am too. It had that big pullback back up today, and I'll be honest, Mike, I don't mind that pullback back up. We see that on downtrends all the time where a stock goes down, hits off support, pulls back up, maybe starts to fall back down more the next couple days. I could easily see that happen as it retested a lot of these resistances. So I like it, and I'm also watching another stock to the downside as well in NVIDIA. Now with NVIDIA, I've actually seen a pretty big trend line here lately to the upside. This stock's been bouncing off of it a couple times, and this morning we had a nice retest here. I think this will be a good level if we could start to break below that trend line and break back below this 415 to 414 support. I'll definitely start to look at more puts, kind of like Netflix. It had that big move back up today, but I still think it could go down here more in the short term too.
All right, sounds good. Another stock I'm watching is UVXY. So this is like a crazy ETF that rises a lot when there is fear in the market. So it had a great day today, and at one point I think it was up like 22% today. If we keep seeing like selling pressure like we're seeing right now, this thing can blast it's awesome for short-term trading only. And when it's moving like this, it's like you can't not watch it. So I'm definitely watching it to the upside over the next couple days.
Yeah, and for all those superstitious people out there, it was up 7.7% today. I don't think you can have a more lucky closing number than that. Unless it was 77.77, but that would be insane. I'm actually watching a bit of a outlier, Mike. I think this one might surprise some people. This is actually EA. Now, EA, if we go out to a daily chart, it's been falling down pretty consistently here the past couple years, but recently, we hit this big support down around 110. It's been coming back up, and we recently just broke above a big trend line, and we've been seeing a lot of these trend lines break recently, and some of these stocks have been taking pretty big runs to the upside. And I like that this stock is also not very correlated to the SPY. It's in the gaming sector, which I like, and I think that sector's good. So the one problem is the stock has terrible options. There's like no volume. There's big spreads on it. There is some good open interest on a couple, but the spreads suck. So it'll be a stock play for me, but I do like it for the longer term, and I think that this breakout in the short term could even be pretty good. But, on this one, 5 to 10% is pretty good. You don't have to hold it for too long.
Come on, Tom. I don't want 5 to 10%. Give me somewhere like 300% reward potential.
I know, right? You could maybe do that if you're going for that with some of those options there. Some of them were okay if you played the spreads right, but obviously you have to have some experience with that if you're playing some lower volume ones there.
I feel you for sure. So good stuff there. But it is now time for the momentum plays for tomorrow. And with the first one, we have the big dog, Apple, to the downside.
AAPL, Mike, it had a big green candle. How can we trade this one down today? But let's go ahead and make it fall below 191.50. Pretty big intraday support there today. They closed up very high, but I still think that there could be more pullbacks coming into the tech sector here as the week goes forward.
All right, with the next one, we have AMD, also to the downside.
AMD, yeah, pretty big recovery today, bouncing off resistance. If they end up falling under 113, I'll look for some puts here. There was a bit of support there today, intraday. Mainly, it was a support from a couple weeks ago, but I will be watching it for a move under 113, Mike. If it falls under that, maybe target 112 and then 111 under there.
And with the last one, we have Microsoft, and we need both directions.
Yeah, MSFT. I think this one could really go both ways, too. It's been really holding up today as well. Go ahead and make them break that high of day around 343. They've been a powerhouse here the past few days, but if they break below support right at 340.50, then look at puts. I will say, though, that end of day bounce off of there is looking pretty good.
Sounds good. So for Microsoft, we have that upside level, and if it breaks above that, we are watching it for calls. We also have the downside level, so if it breaks below that, we're watching it for puts. And then don't forget about AMD and Apple. Also, with those downside levels, if they break below them, we're watching them for puts. But it is now time for the big money $2 million trade of the day. And we are looking at FIS. FIS had $2 million dumped into the 70 strike call options that expire on January 19th of 2024. FIS is in the financial information services / I guess you could just say the fintech industry. The stock's pretty oversold on the daily chart right now. It has potential, but I will say this one will take some time. So it's not necessarily it's not like we're trading Tesla here or anything like that. It moves a little bit slower. It can work, but like I said, it'll take some time.
Yeah, it really will. I'm curious how some of these financial stocks do here towards the end of this year. We're talking about the Feds raising interest rates, maybe one. Looks like one's definitely coming at the end of July. At least that's what's being priced in now. Maybe another one after that if the economy continues to go that direction. But I don't know. I'm curious to see how these financial stocks do. That's a lot of money. I will say the 70 strike calls, I'm a little bit worried these might be covered calls on some shares that were maybe bought down here low, but I don't know. That's a lot of money, $2 million. If we start to see this maybe break recent highs around 60 to 61, I think that could be a potential breakout play there. And I'm actually going to make a nice alert here right around $61. So if we get up there, we get that breakout, at least I'll be ready for it.
Perfect. Love to see it. Now, Tom, in the beginning of this video, we really emphasized that people should watch to the end, right? And of course, we covered a lot of great information today, but there's something so important that I just have to point out right now, and that is the VIX, VIX index. This thing is so important and it's so telling because it literally tells you what the volatility expectations are for the market going forward. We have seen this thing fall and fall and fall in a very consistent way over the past couple of years. And today, while it had a good day closing up around 9%, it was actually even much higher in, like, you could say the beginning of the day, right? It is rare to see moves like this that we are seeing in VIX, and when they happen, you cannot ignore them because essentially before every single major market downturn, you have an event like this. But there's a very big difference between, you have like warning signs and you don't see a market crash every single time the VIX just has a good day. But the main thing I'm trying to point out right now is that the VIX is rising in a way that you cannot ignore because historically, when we've seen price action like this, it has always led to opportunity. Most of that being to the downside, right? Because most of the time the VIX rises when the market itself falls. But there have also been times when the market and the VIX rise together. But anytime you see the VIX rising, there's like great opportunity associated with it. And essentially what this means is things are about to heat up pretty soon. So buckle up.
Yeah, exactly. And we're seeing insiders start to dump shares of like stocks like Nvidia. I haven't been seeing all the big stocks, obviously, with insiders selling shares. But man, like to see that stuff going on and, seeing VIX start to pop up off of these lows around 13, it's definitely telling here. Now, what I will say is VIX is volatile, right? There is little scares all the time. There's times where VIX goes crazy and nothing happens. But I have a feeling, Mike, especially with how overbought stocks are, sometime soon, I think VIX is going to start to pop back up towards maybe 19, 20, if not even higher here. Come back up and retest some of those levels. So be ready, guys. I think that we could see a little bit more of a downflow here, especially with those job numbers today, because it's just going to make the Feds want to cut rates even more because what they've been doing essentially hasn't really been working too much, especially on the labor market. So we'll have to see how things keep going, Mike. And Powell keeps saying that they're going to have a mild recession too. I mean, that sounds god awful if we have a recession. The last one was 2020, then 2008, and then we had a bunch of comparisons today to 2008 as well, like credit delinquencies. Buckle up, guys. That's all I have to say.
Yeah, and this doesn't mean that we're going to see the crash of a lifetime. It just means like, hey, the VIX is rising. That's an important warning sign, and it tells you that volatility is most likely going to increase going forward. And that's a good thing as long as you open up yourself to, long volatility exposure. So, day trade, swing trades should do pretty good going forward. But, it all depends. So, volatility is coming. That's a good thing. Tom, do you have any final thoughts before we close out of today's video?
Yeah, I know that we talked about a lot of stuff today. Just don't forget, we do have those non-farm payrolls and the unemployment rate for tomorrow. I know that those ADP jobs numbers today were very important. Obviously, that made a big move, big impact on the market. I'm curious to see how these go tomorrow, 1 hour before market open. Just wanted to remind everybody one last time.
Perfect. And if for some reason you are not subscribed to the StockedUp YouTube channel, make sure to subscribe. When you subscribe, you'll see our videos recommended to you more often. In every single video, we go over a multi-million-dollar hedge fund trade, the most important news you need to know about right now, and the best setups of the week. These videos take hours to produce. We go through more information than literally you guys can imagine to make these videos as great as possible. So why not subscribe, right? Also, I want to give a giant shout out to today's member of the day, Savage Angel 31 on YouTube. You've been a great supporter for years now, and we really appreciate your comments and support. So huge shout out to you. Besides that, guys, let's have an amazing end to the week.